if this company wants some advertising for their beer, they better pay us. Otherwise, I'm not turning the label around. And if any of those people out there make fun of me for drinking cheap, watery American beer, they can go fuck themselves because I like cheap, watery American beer.
You're not alone in that. I mean, I'm not with you.
You guys froze on.
People obviously buy it, though. Welcome back to the Futures Edge podcast. I'm Jim Uriel. As always, we have co-host and brains behind the operation, Bob Iacchino. And today we have, again, capital partner, John Kilduff, also CNBC contributor and the author, editor of Kilduff Report. Thank you for coming on, John. We appreciate it very much.
It is absolutely my pleasure. This is a real treat for me. Thank you.
So if you walk up to a bar, doesn't have beer or wine, what's your go-to drink?
Since I can't chase down the JMO with the Bud, then
Budweiser.
I would go with a Beefeater on the rocks with a twist of lemon.
Beefeater, that is a nice call. Bobby, what's yours if you're going for a mixed drink? Is it just going to be a bourbon?
No, I mean, usually it'll just be a bourbon, maybe a splash of water if I'm feeling like I might like depleted. But here's the funny thing. So John grew up in a time, and we're all about the same age, but grew up in a time where the point of drinking was to get drunk. It wasn't the flavor, right?
Indeed.
So I make fun of people all the time, and I'm not doing this to you, John. It may sound like I am, probably because I am, but people will say they like Jameson's, but they chase it. So that again shows that your goal, you have a goal, and it's not flavor.
I resemble that remark is all I'll say.
Are you Irish? Kilduff is an Irish name, probably, right?
Yes, it is. Yes, it is.
And
100%.
we get to the center of the shrubbery maze.
That's right. We solved all the problems there.
Many times.
Let's talk about market. Oil is your specialty. I was just on with Scott Shelley, the Cow Guy show. We talked about the releasing of the SPR that's going on right now, down to levels not seen since 1985-ish. To me, again, on this show, by the way, we call out anybody we want. We don't give two shits about if someone wants to sponsor us, wants to not sponsor us. We are not going to have a show where we don't call out people when they're being stupid. Is this a stupid decision that's being made into a market that had turned, based on probably market position and some demand destruction? Why are they selling SPR now? Is it a big deal, and could it come back to bite us bad? He's either frozen or taking a hell of a long time to think about it.
I think he's frozen again, but I don't know if he can hear us or not, but I'll actually take that. I just wrote a piece for that for Open Markets, CME Open Markets, and they're not sponsoring us either, so I shouldn't be telling them about this. But literally on some of the problems with the release of the SPR, number one to me being, and hopefully John could hear this because I really want his opinion on it. Number one, the SPR was developed as a national security measure, national energy security, not because the current administration, whether it be Bush, Clinton, Trump, I don't care, Biden, not because they don't like the price, right? And we did lose John, so he'll be back on here. But it's not, it's been used in times of hurricane, and I would agree that even that's a bit of a stretch because, hurricanes are generally shutdowns. If there was damage that couldn't be replaced, okay. If there was some maintenance that had to take place, okay. But if it's just like, hey, we had a little bit of a hurricane, so I actually believe Trump did this. Don't quote me because I'm not positive. But if there's a hurricane, it's all of a sudden prices spike 25 cents at the pump, which is a lot. They released some SPR in order to, fend off the bad weather. And I just think this particular case, this is a situation where the SPR release was because we have midterms coming up and he didn't want the price of fuel where it was.
That's what it seemed like to me, certainly. What's the worst that could happen? This is going to still go to Bobby. And then, John, you know what the question is we're talking about, right?
Yes, I do. Yes.
So, Bobby, you go first. What's the worst that could happen? How bad could it bite us?
Well, I mean, the worst thing that could happen is, at the end of this next release, which goes through the fall, we're going to be down about 434 million barrels, which is only about 30 days of supply or so. And the worst thing that could happen is an oil embargo. I mean, we're not in a position for that to happen, but certainly things can flare up in the Middle East, and you can't, contrary to what a lot of people said back in 2016, 15, oh, they'll just turn the shale rigs back on. It doesn't physically work that way, number one. Number two, if there's an actual real disruption for national security reasons, we're very limited. And you're not going to be able to kind of ease that much at all. And then lastly, it now has to be refilled. So they've solicited bids already for lower prices in the future. We don't know what those bids are going to look like, but those prices will be locked in wherever they're at. And you're theoretically putting in sort of a floor, an artificial floor in crude oil in the future, because there's a buyer that needs to buy somewhere in the range of 200 to 400 million barrels.
John, what do you add to that? The question, I guess, when you were gone is it appropriate? It seems, I assume you're going to answer no, it's not appropriate right now with oil in the 80s, but what's the worst that could happen?
Okay. Well, first of all, I thought in the beginning it was in fact appropriate. And I'll tell you guys that this is going to, I may surprise you with this. I've always been a full-throated advocate for aggressively using the SPR to push back against these Middle East cartel people who keep trying to stick it to us every time they turn around or have the opportunity. Look, the market went nuts when Russia invaded Ukraine, right? I mean, WTI went to 130. You have some of the Cracker Jacks over there at Goldman, these other places calling for 130, 150, 180, 200, pick your number. It got crazy. So this release actually helped, much more so than I think people gave credit for in the beginning. I mean, look, Jim, there were weeks where the 8 million barrels or so, and Bob, that we got out of the SPR covered what would have been a very large commercial inventory drawdown, if you looked at the numbers. So, and also too, with this some of this SPR oil actually got exported. So that helped the international market as the Europeans are trying to turn away to the extent they can or needed to from Russia. Now I'll say this, right now, this thing should end because we haven't lost a meaningful amount of Russian crude oil. That was one of the biggest miscalculations of some of the investment banks. And, it was one of the things where I thought it could happen, but I was keeping my fingers crossed that it wouldn't. And you guys have been around these markets, a long time as well. When that panic sets in, when people are rushing to buy and really talk up a position or an ongoing acute event, it gets carried away with itself until the dust settles. And that's what we're looking at right now. The dust is settling and we're hanging in there. We've been lucky.
Okay, so by the way, we like when people come on and disagree with us at all, it's such a bullshit thing that everybody goes in some echo chamber and knocks things back and forth. It sounds like you are agreeing that it's either not appropriate right now or far, far less appropriate than it was. If the answer to that is yes, then what's the worst that can happen if it continues far longer than it should?
We don't want to get caught behind the 8 ball in terms of having no strategic petroleum reserve to tap, as Bob just alluded to. However, we could also too just eliminate to a degree exports of our crude oil. We've been a massive refined product exporter, but also too, I would point out, I understand the program to work a little differently, Bob. If you take oil out of the SPR, you're not paying for it, and you got to replace it down the road. So it's really a windfall for, say, ExxonMobil and some of the other big companies that have tapped this thing. They're getting free oil now in a $100 barrel zone. And if they were smart and they locked in the back of the curve, which is still down around $74, what a mighty spread they've just picked up. So, but you are right about supporting the price in the back of the curve because of that demand that's definitely coming, and it will have to get replaced. But look, go ahead.
But I was going to say when we have to replace it, and we all agree that we have to replace it, you do run the risk of a time where the price of oil is going higher and you exacerbate a higher move by doing so, correct?
Yes, my understanding is, Jim, that part of taking barrels under this program is that you, the company that took them, Company A has to come up and return those barrels down the road. So It will be replaced and replenished, no doubt about it.
So let's move on to natural gas and LNG and the situation that's happening in Europe. How do you feel that's, well, first of all, I do want to come back and get like a kind of a market type prediction on crude of how you think the next 2 months are going to play out, particularly when they stop selling the SPR, and then we'll move on to natural gas. So let's do that first. So what's your price targets on crude? Where do you think it's going? Where do you think it'll be?
I think we're going to continue to staircase lower over the course of the next 6 to 8 weeks, let's call it. And I'll give you a longer term projection in a second. So I do think we'll break 80, probably into the end of October for a time. But then all the fears about what's going to happen with the European winter are going to set in and grip this market because like we see in the run up to the driving season, like we saw earlier this year, although of course was compounded by the invasion of Ukraine, we typically get the run up beforehand and then a sell off afterwards. Once we can again sort out, let the dust settle and see that we are in fact adequately supplied, not oversupplied, not terrifically supplied, but adequately supplied. But the pressure we have this year, and I think that's why we'll rebound as we get into the end of December, into the first quarter of next year, back towards 90 to 100, because the diesel situation is quite acute right now. We did not replenish those inventories ahead of the harvest.
Crap. I was loving that answer too. But Bobby, I'm going to go to you then. So the natural gas situation, particularly in Europe, going through the roof. How do you see that playing out? Do you think we're going to begin shipping LNG there?
Well, it's difficult to do that right now simply because we had one refinery, LNG refinery, actually go on offline, and we're hurting for LNG capacity. The refinery that went offline due to actually just an internal explosion, right? It was just some damage to the refinery and it needs to be repaired. And at the time that it happened, and I haven't looked up if there's any scheduling to fix it or not, at the time that it happened, they were talking about 8 to 12 months. So the capacity to refine it, to turn it into liquefied natural gas is very limited. Also, there was actually some proposals politically, don't quote me on who it was because I don't remember, where they basically said that they were going to make sure that U.S. demand was taken care of before they sent any LNG overseas, simply because the price was so much better over there. So, John mentioned spreads in the crude oil market, the natural gas prices, to send LNG there and actually convert it to liquid, send it there and sell it. The margins were just massive considering where the prices had gone in Europe, which is kind of the way a market's supposed to work, right? This way, the extreme rise in price that happened over in Europe and the UK could have been spread across the globe and maybe ease their pain a little bit, but we're just hurting for refinery capacity. So I don't know how much more can be done at this stage in the short term.
So John, when you see some of the things that have happened in Europe, some things that have happened here, do you point fingers at government policies that try to switch us to green energy before we are ready for that? Do you think that's a genuine risk?
Oh, 100%. I will say that I think there's an over-criticism of the Biden administration and their policy towards drillers, however. But because look, the price crash 2 years ago wrecked the industry. I don't care who was president. I don't care who was Pope. Okay, these guys weren't putting sticks in the ground again for a while until things, they were sure so they could see the whites of the recovery's eyes. But again, the administration's attitude and signaling doesn't help. Let's put it that way. But for sure, Jim, this is an analogy I use here in New York City area where I live. We replaced a bridge north of the city called the Tappan Zee Bridge. And
you think us Chicago guys don't know shit, right? It's like there's this place called New York. It's this magical city, right? And I don't know.
I just don't know. Well, it's like upstate, even though it's like 20 miles from New York City. People
right, we've heard of the Tappan Zee Bridge, jackass. Go on, right?
But we didn't close down or remove the old bridge until the new one was opened. All right. So yeah, we can't be going nuts with green energy and all the rest of it without taking care of business on the home front and still using all our traditional sources. I mean, Governor Cuomo shut down the Indian Point nuclear power plant here. We lost a huge chunk of supply from that with no replacement. And the thing we need, I think everybody knows this by now, is that we can have all the solar panels and wind, machines out there that you can get. you need a big battery overlay to store this, to store the energy, because that's what gets you through. I might point to your car, right? You know, so one thing great about the gas car is that this full tank of gas, that thing's ready to go on demand, and you know how far you're going to get. This intermittency with solar and wind is proven to be a real problem, because it's funny. I've seen days in the UK, for example, wind is 100% supplying the electricity. That's great until it's like zero. Same thing in Texas. There are days when the wind whips down there, and most of the grid is supplied with wind power until it goes down to like zero.
So what are it's a storing capacity issue then, right? With the renewable stuff, and we don't have the storing capacity, so you need it right then, right?
To me, it is absolutely. We need a big battery overlay. If I was like, you know, to wave a magic wand and say, how do you fix this thing? It's a big battery overlay, which we just don't have the capacity for either at this point.
But is nuclear, and Bobby, after this, I want you to come in on this too, because energy's more your thing than me. Is nuclear like everyone who I talk to who seems to have their thumb on the pulse of this says nuclear is the real answer? Is nuclear the real answer?
It's a huge part of the electricity answer. There's no two ways about it. And, you know, it got such a bad rap. I mean, it's so scary to people, for starters. But 3 Mile Island, that was one thing. Then the Fukushima plant. This is something that drives me crazy, that disaster. There wasn't, you mean when they were planning that thing and building that thing, there wasn't one single brave soul who sat in one of the planning design meetings and said, hey, you know, the backup generators outside, just throwing it out there. Do you think we're at risk because of the earthquakes? And since they generate tsunamis, that would be taken out? I mean, there wasn't one single brave soul
God almighty
thought about that. You know, because that ruined the nuclear industry, not just in Japan, but that's why Germany and Europe shut down so many of their plants, pointing to Fukushima.
And Bobby, I swear I told you I was going to let you in, but I have one more thing too. The psychology appears to be changing. Do you think it's changing fast enough to have a material impact over the next 10 years, 15 years? Do you think new nuclear plants will actually be built, or at least old ones being brought back online, or however that works?
I think first, hopefully we'll get some extended that deserve to be extended. And yeah, you know what's going to drive that, Jimmy, is the extent of the brutalness of the winter in Europe this year. If they have a brutal winter, it's going to be totally a popular idea.
God, it's so funny because, you know, Bobby and I, when we talk on these shows, you know, we have fun talking about this stuff. But as soon as that topic of Europe comes up and what they're facing ahead of us, that is terrifying to me. And again, I can point all the fingers and say these mistakes were made, but that's a terrible thing, and my heart goes out to them. Bobby, what do you got?
Yeah, so I want to go back, if we could, John, because number one, I agree that administrations, whether it's Biden's, whether it's Trump, whether it's Obama, whether it's Bush, get too much credit and too much blame. They're not even like a quarterback of the economy, in my view. They're more like a middle reliever of the economy, where they come in, they do what they can do, and the rest is really up to the rest of the team and the starter and the reliever. But I think the point I'd love to see you expand more upon is, and you're not going to be able to put a number on this, but how bad do you think the rhetoric was to get us where we were? I mean, if you go October 2020 to October 2021, price of crude oil was up 111%. And I think if we go to October 2021, maybe you started to see troop buildups from Russia going into Ukraine in the news. And clearly when we spiked up to 130.40, that was ridiculous. And Goldman said $200 a barrel after that happened. I mean, that was just insanity. Yeah. But, you know, I'm looking back at campaign speeches and I just thought, okay, number one, no more subsidies for the fossil fuel industry, no drilling on federal lands, no more drilling, including offshore, no ability for the oil industry to continue to drill, period, ends. How much are things like that? And that's obviously continued. You know, there's Wall Street Journal wrote an article just a couple of days ago about how you have to go back to Truman to find this few leases in the first 19 months of a presidency. Now, we can agree that some of the leases are crap. We all know that, right? Sometimes they're just kind of releasing old land where the lease expired. How much, if you were to put just a bullshit number on it, how much do you think the rhetoric hurt in getting up off the deck for those crude oil companies and saying, okay, we got hit hard, but let's go at it. Things are back up. I don't think they would have done it at $43, which is where we were October 2021.
No, I think that's right. I think we certainly would have been back by now to record production, which we're not. We're still, depending on which EIA number you want to use. The monthly number we're at 11.5, the weekly number we're at 12.1. We should be at 13.5 by now, or would have been pushing 14 if there was more of an encouraging administration. That's for sure. It was unbelievable to me how they were tripping over themselves to shut down the fossil fuel industry, considering how important it is to us. I mean, because we're still ways away from having a mass adoption of electric vehicles, and certainly I'm yet to see an airplane that can fly on electricity purely yet. But again, I will tell you that that minus $40 print for WTI hurt, Bobby.
Yeah, for sure.
I don't think you can really take it away. There was so much consolidation in the industry. There were the bankruptcies that ensued. The big guys swooped in, ExxonMobil, Chevron, and some of the other folks, Oxy, right? So that, and they exhibited discipline, because they're the ones who really got the message from the administration that they weren't necessarily in favor, and they're still being hounded to a degree. But they're moving forward, at a typical ExxonMobil glacial pace, but moving forward. And they do have plans actually to expand production by about 20%. So I think thankfully, if you will, this energy crisis that we're in the midst of right now, I think, set a lot of wagons straight in terms of what the reality is of moving forward on this. And we dodged a bullet, because if we had gone hog wild right out of the gate in early 2021, and they really did move to aggressively, shut it down, if you will, or curtail it, we'd have a hell of a problem on our hands. And thankfully we don't. And I think that's thankfully because, we got Biden, who's a middle of the road, kind of deal cutter guy who has to flirt with the left, I think, more than he probably would like to. And so we're keeping on.
So
well,
I'm sorry, Jimmy, as a follow-up to that, we're recording on Friday at 4 Eastern time. And I haven't honestly looked at the markets in a few minutes, but how much of it's an interesting move today in equities and honestly in just general risk assets, right? So do you attribute that sort of continued move down in the fuel sector as being enough to kind of say, okay, we could actually get back to buying what we think we should buy? I mean, the breadth is big today. Every sector is up. Copper, 2-day rally going on behind it. Crude oil, couple-day rally. Do you think that the energy price fall is enough? I mean, we had the ECB estimates of inflation, and their estimates, granted a different economy, but their estimates were 8% this year, over 5% next year, 2.1% 2 years from now. So how do you feel about, given today's move and what's going on with energy with the consistent drop, especially at the pump?
I think it's popping up on a lot of screens, radars, as a delicious risk reward long play at this point, because as much as I just talked about some of the internal issues with the markets and things, the vulnerabilities abound, and I don't want to underestimate that. The only thing holding this market back in a big way, which I think is a tougher calculus right now, is China, because they are as important to the demand side of the oil price equation as Saudi Arabia is to the supply side, I would argue. So, but in terms of the breadth, I was thinking about that. All the crying during August about the breadth and everything, and the loss of open interest. It's August, it's summer. Here we are, September. Like you just pointed out, volumes are good, risk appetite's coming back. Things are looking a little different. The dollar backed off. That rally in the dollar was also a big downward pressure on commodity prices, as you guys both well know. So I think potentially this is a good time to get in. You might take some more pain, as I talked about, into the next few weeks, but I think, man, that the fundamental setup does favor a rebound of some significance into the start of winter for oil.
Do you guys think, this is for both of you really, do you think the situation between Russia and Ukraine, is there a resolution that's going to happen in the next few months? John, you go first on that. Do you think so?
I do. Well, first of all, Ukraine's starting to kick their ass. You saw some of the
Well, here.
reporting overnight. There was a big sort of blitzkrieg by the Ukrainians against the Russians. And, they're getting squeezed. The Russian economy's getting squeezed. I wish more like this energy price cap you're talking about. They should shut down the Russian visas to all these European countries. Lock those people in Russia with nothing to spend their money on. Let's see how long Putin hangs in there with that kind of pressure and that kind of deteriorating economy. So I think he's on the ropes. I think Russia's on the ropes, and I think that by Q1 of next year, this thing could be wrapped up, especially if the Ukrainians keep going like they're going.
Bobby, what do you think?
Yeah, I agree with John entirely. It seems to me like a resolution has to come, but I worry because, if you want to talk about world leaders in our times that had the capability of doing something drastic, I think Vladimir Putin clearly falls in that category. And that worries me. Like, I don't think he's going to heave a nuclear bomb into Kyiv or anything, but he could just do something so drastic that the whole situation turns upside down. And that to me is a really dark black swan for us in markets, just kind of in general. But if it continues to go as a mostly conventional war like this, I think that's part of today's rally. And it's interesting because the rally overall today, to me, Jimmy, feels different than the last one. So I'm on record multiple times as saying I don't think the June lows are the lows. Part of it is because stagflation is one of the periods of time where recessions don't actually result in higher equity markets. Otherwise, normally recessions year out, markets are higher, right? And I'm not even saying we're in a recession. We don't know that yet. So from that perspective, today feels different. The last couple of days feel different. Now, in my time in trading on the trading floor, whenever I was going off a feel, I was wrong. So I'm going to wait until our formulas and our price action tells us what to do. But today feels different. I think a part of it may be what John said, that it seems like that situation might be turning for the global good.
I agree.
And sorry, go ahead. I was just going to say that's a great point, Bobby, because when we've had sort of Russian successes in this theater of war, the markets did sell off. So the equity sold off and crude rose. So that's a great point.
But I can back up your feeling with some genuine technical analysis. That 3,900 level, our analyst, Mike Arnold, I don't know if you've watched our podcast before, John, with him on it. He's brilliant. Yeah. And 3,900 level was a very, very distinct line in the sand. It was the 0.618, 0.625 is what he likes for retracement. And it held like a champ, and it bounced off that pretty well. At the same time, it seemed like there was a feel change in Europe. Like a lot of the bad had been priced in. Like now, all of a sudden, the market's starting to consider that maybe things will start to get resolved. So I have been on record saying I think the June lows were the lows. I have also been on record that I think the Fed moves closer to neutral. I said end of September, and I'm walking that back and saying I was wrong, Bobby, before you scream at me. But by the middle of October, I think they will start talking about neutral. John, do you have any comments on that?
I agree with you. I hope they will, Jim, because I don't understand why people aren't talking as much about the Fed's hammering this. All the central banks are hammering down, but also the U.S. fiscal spend has really cratered. I know the Biden likes to take credit for this, but $1.7 trillion less deficit. Thank goodness. But that's a hell of a lot of money too that's coming out of the economy that's not getting spent. And that to me, that was the bigger part of the inflation problem. And I say this because how many years do we sit there and watch the Fed, do QE, do negative interest rates, or try to, or at least keep them near zero, pay for reserves, and they couldn't move the needle on inflation. But man, you came along with the Trump tax cuts, the Trump COVID bill, and then the Biden bill, and then these others. Forget it. The spending exploded, and the M2 exploded, and I think that has a lot to do with it. And I'm hoping that now they see how the N2 has come so far back down that the Fed will, take it easy on us. Which I
appreciate that we sometimes tend to blame one side. We blame everybody pretty good, but I like the fact that you're drawing
we hate
back
everybody,
to the middle.
John, just so
we
you
hate
know.
everybody, but you're pointing fingers both ways and blaming everybody. I like that a lot too. Earlier in the conversation, you mentioned electric vehicles. I know Bobby has some opinions on this. We'll start with you. Are they really the answer? It seems to me I just keep getting barraged with messages from both ways about the costs to build them and the rare earth metals and the mining and the environmental disasters in building them, then juxtaposed against, they're clean burning once they're alive. Are they really the answer, John?
Yeah, I think it's puzzling to me to a degree, to be honest with you. The rare earths, the mining of that stuff is not pretty. It's right up there with blood diamonds, if you ask me. The handling that waste when their useful life is over is a big problem. I saw a report, now this is anecdotal, but the solar panels out in California now and the waste in the landfills are starting to pollute the water. Reminds me of MTBE and the problems we had with that back in the day. So
what's MTBE? I forgot.
Oh, sorry. Before they put ethanol in the gas, they put methanol in the gas. But
I do remember now. Yeah.
And it polluted, and it's unbelievably soluble. And so, the gas stations didn't have the greatest of tanks back then. And once it got into the ground, it just ran and found its way to water. There was a map in the United States that looked like the Republican congressional map of wins when Trump won last time. It was just all red. I just never forgot it. We had to get rid of it, unfortunately, because it's a great fuel, huge octane booster. But it's unfortunate that it had to go. But that's what the EVs sort of remind me of. So especially if you're having to power them up with electricity that's coming from a coal plant. I mean, what are we doing?
So at least if we can substitute a nuclear plant in that would be cleaner. Bobby, you have thoughts on this?
Yeah, I mean, first of all, there's been plenty of research done that shows that hybrids is definitely the way to go, not only in the efficiency and the transition that John talked about there's a couple of bridges in New York. I wasn't aware of that, but with the bridge, where the transition.
New York again? Right, yeah.
Down the big city.
Where the transition is actually the most important thing. And you can actually get affordable hybrids out to more people, which will overall cut net carbon emissions by quite a bit more than these limited production, sometimes way too expensive cars that need subsidies to be afforded. That's number one. Number two, I have a personal preference. I mean, I own a Mustang with a pretty large V8 in it, and I like the sound and I like the feel. And yeah, I'm that guy, unfortunately.
You're a Dago is what you are. You were just born to be a
friggin' Italians. If I could find an electric blue IROC Z, I'd buy it today.
Bam.
But from that perspective, I have a personal preference, and I just don't like any situation, any administration from any party telling me this is what you have to do. You have to do this. I always go back to cigarettes where, when I was a kid, I was one of the few people that didn't smoke. And then they just started coming out with information as to why you shouldn't. And all of a sudden, smoking fell off a cliff, right? And the information, I think, is important. And John brings up a good point about the rare earth minerals and the disposal. I think there's a little bit of dishonesty from the anti-green movement, because every time I've seen them talk about, it takes X amount of carbon to create this car in the first place, they're only comparing it to the carbon car that's already made and on the road. They're not comparing it to the steel that has to be smelted to make the carbon car as well. It's a little bit of apples and Fuji apples, as opposed to just a direct comparison of apples to apples. But I don't think all electric cars is a solution. I don't honestly have one. I ride my bicycle a lot, but that's only been able to be a way that I transport myself 90% of the time since I moved to Florida. Because now I can do it 99% of the year. So there's just a lot of realities.
Sure. But before you go,
that's why we're in the early stages, and that's why we got to be careful about the transition and just take it apace and not go whole hog into and put all our chips on any one of these technologies. Hydrogen fuel cells is another potential way to go for us, is for motor transportation as well. That just doesn't get enough attention.
So John, let's go to the metals market for a second. And if you want to pass on this, that's fine, because I know Bobby has some thoughts on this as well too. When you think of the bill that was passed, which is the Green New Deal that was watered down, and we're clearly moving in a direction that the three of us not sure is the right direction with the EVs. But what, silver goes in solar panels, copper, crap ton of copper goes into EVs. And those things have been pounded, maybe because of the strong dollar. Do you look at any of those markets and think that there's opportunity there coming forward? And by the way, there's a ulterior motive, as I always have. In a couple of weeks, I'm giving a speech in the New Orleans Investment Conference about metals of the Green New Deal. So I do like to pick smart people's brains before I do it. Go.
Yeah, I certainly think that you got to play copper from the long side for sure. It's in demand for any number of reasons. Again, China weakness right now is holding it back. It has the same kind of opportunity set to the upside, you could argue, that crude oil does for its various reasons, particularly if China does start to rebound and come back. But copper's a huge part of obviously moving that electricity around, whether it's in cars or smarter grids or smarter buildings. So yeah, and silver too, stepchild to gold, as we know over the years, poor man sort of a bullion. But yeah, I think the call on it will only go up, especially with the incentives, like you just mentioned, from the Inflation Reduction Act and the encouragement to build and get us into an electric car future. So yes, absolutely. Both of those you got to play from the long side.
And Bobby, you agree with that as well. And silver,
Yeah.
when you look at silver and platinum, palladium, like silver particularly, like what percentage of a is it a precious? What percentage is it an industrial? What are your thoughts on it?
I'd call it 60% precious, 40% industrial. John mentioned it's the stepchild to gold. It's also the stepchild to copper, right? Doesn't conduct electricity as well as copper does, although it is used in quite a bit. It's interesting, Jim. You remember last week I said I wanted to buy copper, but I didn't buy it. Full disclosure, it's up 4% this week, and I didn't have a proper formation of a pattern that allows me to buy it within my active trading. But I wanted to buy it mainly because of what John says, that regardless of what happens at the midterms, there's some wheels that are in motion, that they're steamships, they're not speedboats, they're cruise liners that aren't going to turn. And copper is going to be a big part of a lot of these. I think there's probably a reckoning coming 10 years from now in terms of the mining situation, but we may feel it in our industry a lot quicker as people begin to realize how bad things can get when mining is when you rely on mining, which is also very environmentally damaging. Jimmy's daughter is an environmental scientist. You can ask her about that. It's like, when you want to electrify the company and you don't want to damage the environment by mining, I'm not sure how you do it.
But by the way, when you live sometimes with an environmental scientist and she's shipping off to Stanford for another degree next week, you don't have to ask them their opinion. They just tell you.
I was going to say, how did you let that happen?
Right, exactly. No, I believe
scientists
that conservatives should be taking over the issue of conservation. It's right in the goddamn name. I like wetlands. I like a clean environment. I consider myself an early adopter environmentalist, but I hope she didn't hear that. She's living with me until she moves to Stanford next week. But anyway, what's your
congratulations? Jim. Congratulations.
Thank you very much. And what's your pick for the metal? Of the next 6 months? Do you think copper too?
I would go with copper. Absolutely. Yes.
Yeah.
It's got the industrial case. It's got the sort of risk reward because it's come down so much, and you're going to start to hear, I believe, increasing concerns of what Bobby just raised about the sort of longer term outlook for it. So it's sort of like buy now, beat the rush.
And
Jimmy,
we talked about
John, I'm not sure if you know this, but Jimmy owns a restaurant in the suburbs of Chicago, Branson, Palatine.
I've heard of it. Yeah.
I can't believe we haven't mentioned it till now.
Well, even though they don't cash sponsor us either, but to me, copper is a burger. Like, you just have to, when you're looking for that one thing, it's got to be copper. Based on what John said, it's the tried and true. It's what they're going to go to. I believe really firmly in technology, by the way, that I think down the road, that's why a lot of these climate predictions over the last 30 years haven't come to pass. I don't suspect that the models were that bad. It seems at this point like they were, but a lot of it has to do with technology and some of the advancements we've already made. And again, I am not, I've been called a climate denier more than I've been called a supporter of climate change or a believer in climate change. And I'm not a denier in the change in the climate. I just don't want, and John, I'm positive you fall on the same page. I don't want this beautiful earth that everybody has died from famine and the earth is sitting here by itself.
Oh yeah, no doubt. And we've done a lot of great things. I mean, electricity conservation and efficiency gains have been huge over the past 2 decades. Really something to be proud of. And and also too, in terms of, like you said, technology, cleaning up the water. Like here in New York, I know out in Chicago too. I mean, we've had whales here in New York Harbor this past summer. So, I mean, just that's how clean it's gotten. It's been
The
incredible.
headline about the whales, John, though, that was a negative. The headline I saw in the New York Times was global warming forces whales or something like that.
Oh,
It
right.
is
Yeah,
the
of course. Yeah,
All right.
nothing to do with the clean water and all the bunker that you can't
Okay, thank you.
get away from that they're enjoying. Right. No, of course it's the climate.
So John, at this part of the show, like Bobby and I switch to talking about trades, and some of these are short-term trades, and some of these are actually, based on technical and counter to what the fundamental pieces is. We'd love you to stay and tell us how much of idiots we are, this and that. But if you're not that interested in it, feel free to leave at any time. First one's going to be about 2-year. Bobby, what's your trade on? I didn't read it. I'm sorry.
Oh, no, that's okay. My crude. So you know what it is now? My trade is actually,
Yeah, I do.
is a crude oil short.
Okay,
and
good. So
I like
John's
the
going to actually
pattern.
like that, I think, right? Yeah.
Yeah, and
So-
I really like the pattern that's forming longer term. And again, John, since you're still here, my business partner and sort of the show's official technical analyst who comes on every Friday, first Friday of every month, to discuss kind of looking forward and looking back. He talked about a double top on a weekly crude oil chart a while back that broke, and his target was in the mid 60s. And this was 3-4 weeks ago that he got medium to long-term bearish on crude oil. And I actually affected a short position off of that, covered it, and now I'm seeing another one, Jimmy, you'll know this, based off of the rotation zone on the same chart. So crude oil has come off and it's gone back up into Mike's rotation zone on a weekly chart. And I'm going ahead, and Mike's going to get mad at me, but I'm jumping the gun and selling it because it's the first cross rotation zone. Now, Mike is not jumping the gun. He's going to go ahead and wait. But I already sold crude oil. I sold it at 89.60. I've got to stop at 98.83. And my target price on this is actually 69.30. So it's a longer, I call it a medium term trade, right? I don't expect to hold it more than a couple of months. Going into the winter and in the summer driving season, short of some sort of OPEC just idiocy or some sort of geopolitical event, and then I'll get stopped out. That's fine. This trade risks about just under $1,200, $11.93 to make about $17.60. So it's about 1.48 to 1 reward to risk.
So I printed out the daily crude chart before coming here today. Just so
nice.
Beautiful.
You're high tech.
Yeah, and I got a flipboard too, Jimmy. If you want me to break it out.
Yeah, I love it.
Yeah, but no, I think this is a good time to be putting that short on, Bob. You got a couple of things going in your favor. Not only that we're in a decided downtrend with a peak up around 120, and then down around your 98 stop, where there's a little, not a double top, but a double high, I'll call it, where we got two daily price bars sort of standing up like the old World Trade Center. They're next to each other. Now, a little bit of a test of that downtrend from the past couple of days, rebound off the low from earlier in the week, but you're still safe. And also, too, we got the 50-day crossing down down below the 200-day moving average, so you got a death cross going. So,
and I got to compliment John on this, Jim, because he said it's not a double top, it's two tops. Over the last 29 years, I've spent so many hours trying to tell people that two tops is not a double top. There's actually a pattern. It has to be a reversal. It's not just two tops next to each other. So
I think you've convinced me of that over the last couple of years, and I appreciate that as well.
That drives me crazy too, Bobby. That drives me crazy too.
Drives me nuts, man.
I don't love that we all three agree on this trade, by the way, but I agree with you. I think that what we talked about earlier in the show, the fundamental thing, and John, to you, I'm sure you probably know this already, but to our listeners too, Bobby and I both consider ourselves probably 65 to 70% technical traders, but we use fundamental analysis to buttress our technical positions. And so I definitely like fundamental analysis. And the fundamental analysis, we could potentially see a resolution. We priced in a lot of bad for the conflict in Ukraine. And if that happens, I think the bottom could, conceivably drop out in the next couple of weeks. So I like this trade as well. Let's move on to gold. So my trade is a long gold trade. With the short crude trade, I think they can coexist together, but I want your guys' opinions on this as well. Because I've been looking, metals markets have been obviously clobbered for a lot of different reasons. I think most of the reasons is the rates going higher, dollar going higher. I personally think we're beginning to look at a time where the rate rises are going to be over. Gold, from 1970 to 1980, gold went from like 38 bucks to 450 bucks. 10-year went from about 7% to 12.5% the same time period. So gold can rally along with interest rates. Gold didn't like interest rates this time. That, I think back in the 70s, gold was like, yeah, we still need an inflation hedge because the Fed is so much behind the curve, whatever. I think gold getting clobbered this time was it kind of signaling that the Fed really is serious. They are. I'm not putting you to sleep, Bobby. If I am, I'm sorry. I'll get to the trade in a second. I swear to God. That the Fed is genuinely going to take care of this. So I've been looking for a line in the sand in gold, and it seemed like 1,700 was the line. So my trade is this: gold trades above, hits to 1,745. This is a stop in trade, a stop in there, and with a target of 1,815, and then a stop placed back below 1,690, which is under that line. So if you do it in the Dees micro, that's a trade risks $550 if you're stopped out at 1,690, and it makes $700 if you get to your 815 level. John, you first. You like it? You hate it?
I do. I think because I think the dollar run may be over as the other central banks finally get their act together and step up and tighten the way we saw the ECB signal this week. And the other shoe to drop still is Japan. If they finally get into the tightening ball game, then the dollar will get hit again. Because again, you'll have a more balanced field here. Because right now we were the only game in town in terms of tightening aggressively. That of course made the dollar more attractive and forced the hand of the other central banks to get going. So I do like it that way. And I do think that, you've heard, as much as the dollar isn't trash or considered to be trash, we talked about the deficit spending has been so reduced. There's still a hell of a debt out there that's got to be paid, and Social Security and things like that. You heard Chairman Powell say the fiscal path is still unsustainable. So that you got that spook factor, still coming into this market that'll push people into gold. So that's why I do sort of like it.
Bobby?
I like it. Full disclosure, a couple of weeks ago, I sold gold at 1,750 on this show, and my stop was 1,830, and my target was 1,611. The title of last week's show is Mike Arnold shows Bobby how he lost his discipline. And my discipline problem was I didn't go to a higher time frame to see if my target made sense, and it didn't make sense. And he pointed that out to me in the podcast. So I moved my stop down to 1,748. So it's contra to a position I have on, but I'm going to lose pennies if I get stopped out of this. But one thing that's definitely going in your favor, Jimmy, that us commodities guys look at a lot is seasonality. Gold seasonality from about the middle of September to about the first week of August. It's the steepest period, the sharpest, deepest move, like the fastest, longest move in seasonal tailwind happens right now. Now that obviously seasonality is not a trading strategy. I always have to throw that in because people will say, well, I'll just buy it every September. It doesn't work that way. But all else equal, that's a heck of a tailwind. So I'm going to say I like it, and then I'm likely to get stopped out the next few days.
So full transparency, which we always do on this show, I'm probably about 70% that I will actually make this trade. If I don't make this trade, you guys all know why, because and I've talked about silver, gold, platinum that I'm long up to my freaking eyeballs on. It's been one of my worst trades of the year, but I haven't got out of it because it was my kind of medium-term investment. So if I don't do it, it's because I don't want to drown in the goddamn metals, but I think I will do it because I like the way this trade looks. Let's move on.
I could just add one. I just wanted to add one more thing just to make it sort of interesting. And that seasonality that Bobby just referenced, that actually coincides with the India wedding season.
Yeah,
and I love that.
Present physical demand.
Yeah. And I didn't necessarily believe that, so I ran it down. And I also talked to Ed Morris over at Citigroup about this a couple of years ago because he wrote a note about it and noted the Indian wedding season. And I said to him, "Are you pulling my leg with this?" And he said, "No, we looked into it, and it's a real thing, and it really drives the demand." So that's what's part of that seasonality, Bobby. It's not just the figment of your imagination.
So
it's real.
My older daughter is flying to Mumbai for a wedding in a couple of weeks too. Not the environmental scientist, the one who sells hamburgers. Bobby, what were you going to say?
Yeah, just the last thing to John's point about the dollar weakness. Basically, every major currency except the yen turned positive on the week this week against the U.S. dollar, if you look at the future side of things, and many of them had these outside range days, which are not necessarily reliable reversal in terms of trading. You can't always get good risk reward on those things, but they're pretty reliable, at least in short-term reversals, these outside, and they were outside range weeks. So they're a little bit stronger. The yen had one, I'm sorry, the yen didn't. The yen was still negative, although it recovered a little bit, but the pound had one, the Swiss had one, Canadian dollar had one. So these majors are definitely going to put pressure on the dollar, at least early next week.
Yeah, and just the last thing on that before we move on to the 2-year trade is the euro days ago, a week ago, had a lot of reasons it seemed like to plunge way below parity, and it didn't. It seemed sticky there. That was one of the reasons I thought about this gold trade when it took over the parity again. 2-year. So John, to catch you up on this, on like 4 of the last 4 shows, I've been long the yield contract. So long yield, the CME, you trade, it's inverse to the bond. So I think yields are going. But when we were trading it 290 and even lower than that, I didn't really have a thesis as to why. It just technically looked good. It's been one of the better trades I've had in a bit, but I really had a very, very difficult time filling it in. My trade today is another technical trade on the 2-year. It's buying the September 2-year CME micro treasury contract at 3.55, where it was, with a target of 3.90 and a stop place below 3.35. Do you think 2-year, and again, I've said like 4 times this whole show, I think the Fed is moving to neutral in about a month's time. So it does even seems, ironic to me that I'm talking about short end yields going higher still. John, can you by the way, that trade, if it hits its target, makes $350. If it gets stopped out at 335, you lose $200. John, thoughts?
And again, it's a bet on yields going higher still.
Yep.
Okay. Yeah, absolutely. Powell has got to, make his stand here. Could be Custer's last stand for the guy, but he's making his stand here and he's driving these short-term rates higher, whether we all like it or not, or whether it's justified or not. Because we're going to start to be able to argue that, as you just said. I think I'm with you in about a month's time, maybe a little longer. But yeah, there's more pain to come, to quote the man. So yes, I think that's
he means our pain, not necessarily his pain. But probably, I guess that's what encapsulates it. Then I'm talking about the next 3 weeks to a month, so that can still fit in with because he'll talk tough right up until the point that he doesn't, right?
Right, and he'll talk tough at the next meeting too, in a couple of weeks.
Yeah, Bobby, agree?
So the only thing I like about this trade, contra to your thesis, okay, when we take your thesis about the Fed pausing in the very near future, is that you're doing it in the 2-year. So yeah, I agree with this particular trade. Even today, Bullard said market is underpricing higher for longer rates. Bullard, who has been like, all of a sudden he became a messiah after, kind of like a year and a half. And that was about 18 months ago, maybe, when he started predicting the next couple.
No skin in the game anymore. Then
he reminds me of Abby Joseph Cohen, who's absolutely wonderful sweetheart of a person, but she predicted one thing and this is a whole career out of it.
Stocks go up.
Now Bullard is just this.
Or Elaine Garzarelli.
Bullard's always right.
Or Kathy Wood. All of them. Like, things go
so
up.
I saw a funny statement this week that said, here's how you know the bottom is not in stocks yet. They're still updating us on Kathy Wood.
Yeah.
I
have nothing but respect for anybody who has skin in the game, but I don't want to hear her opinion all the time because it's always the same opinion. And again, if someone is that leveraged up and making those kind of returns, I want to stay away from them anyway. I like people who are a little more conservative. I'm sorry. I like my money.
I think the Fed is serious, and I think people aren't taking them serious. That's why I think this is going to work. I don't know that it's the right move, but as a strategist, that's not my job. My job is to figure out what's actually could happen and how markets might react, and then try and trade that. So
I also think she uttered the phrase, "It doesn't make sense." And you guys seen people on the floor and upstairs and things when they start saying they're looking at their portfolio and start screaming, "It doesn't make sense." That's when we need a miracle.
Yeah.
Yes, exactly.
I'm sorry, I had to jump in there, Bobby, on that.
No, this has been a ton of fun. I'm gonna take a nap and then go to the bar. What are you guys gonna do? Are you going out tonight, John?
Oh yeah. Gonna get that JMO chase now with a couple of bugs.
Get that JMO that you love the flavor of so much. Chase
exactly.
You can't.
Thanks for making me, putting that seed in my head. Now I'm going to think twice.
Well,
I'm not going to enjoy it as much for the first hour.
I'll throw this out there. This actually comes from me working in a bar when I was younger, watching all these, I'm not going to say which gender they were, but all these young idiots come in and go, I love JMO. I love JMO. Can I have a shot of Jameson with a Coke back? I'm like, you don't love it. I'm
going to drink a JMO tonight. I just decided.
Branson Palatine, owned by Jim Iorio. I don't get a burger at Branson Palatine and chase it down with a slice of pizza.
I'm going to have a Jameson. I swear to God.
It's more useful for the kicker, Bob. More useful for the kicker, I guess.
Well, you chase it with beer. I got to respect it.
All right. So, John, at this show, like on any Zoom call, the thing that I've hated the most is like nobody wants to be the first to hang up. So, the hell with you guys. See ya. Thanks, John.
Thank you, guys. My pleasure. It's awesome. A lot of fun.
See you, John. Thanks, John.